Ladies and gentlemen, good day and welcome to the Q3 FY22 earnings conference call of Manappuram Finance, hosted by Monarch Networth Capital. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance in this call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Alok Shah from Monarch Networth Capital. Thank you, and over to you, sir.
Yeah, thanks, Steve. Good evening to all. On behalf of Monarch Networth, we are glad to have Manappuram Finance Limited's management team with us to discuss on their Q3 FY22 results and the future outlook. From the management side, we have Mr. P.V. Nandakumar, the MD and CEO, Ms. Bindu, the CFO, Mr. B.N. Ravindra Babu, MD Ashirwad Microfinance, Mr. Yogesh, the CFO Ashirwad Microfinance, Mr. Suven, CEO Manappuram Home Finance, Mr. Mishra, CFO Manappuram Home Finance, and Mr. K. Senthil Kumar, Head Vehicle and Equipment Finance. Without taking much of the time, I would request Nandakumar sir for their opening comments, post which we can get into Q&A session. Thank you. Over to you, sir, please.
Yeah, thank you. Good evening, ladies and gentlemen. Welcome to our Q3 FY22 conference call. I hope all of you are safe and doing well. In our last con call to discuss Q2 results, I had mentioned in respect of the economy that we were seeing signs of a sustained uptrend with the resumption of economic activity, supported by the rapid pace of vaccination. Also, that this recovery was beginning to be felt in the unorganized and rural sectors as well. While this optimism held true for the first 2 months of Q3, there was a marked slowdown in the December month, coinciding with the surge in the Omicron variant. At the same time, the important takeaway from our Q3 performance is that despite the Omicron impact, we have achieved good growth in our business volumes from our core business of gold loans, as also in vehicle loan and home loans. However, the microfinance book posted a modest decline in volumes. The overall results show a good growth in our gold loans portfolio, which at rupees 20,450 crore is up by nearly 9% compared to Q2. Importantly, this was accompanied by proportionate growth in gold collateral, which at 70 tons is up by 7.8% Q-on-Q. The last con call, I had also spoken about our efforts to win back high-value customers who are being poached by other NBFCs who competed on price. Since then, we have remained aggressive in our efforts to retain and attract high-value customers with increased ad spends and better incentives to the staff. And that has had a near-term impact on our yield, OPEX and profitability. Accordingly, our consolidated quarterly profits, the quarterly net profit of rupees 261 crore represents a Q-on-Q decline of 29%. Away from gold loans, our microfinance subsidiary, Ashirwad Microfinance, registered a Q-on-Q decline of 2.4% to 6,859 crore in its microfinance portfolio. That was because we consciously chose to go slow on fresh disbursements to focus on prudent lending in this unsecured business, given the uncertainties around the third wave of COVID-19. At the same time, our commercial vehicle business reported a brisk Q-on-Q growth of 19% to 1,510 crore, while our housing subsidiary grew its book by 11.5% Q-on-Q to 817 crore. This was achieved despite the loss of momentum in the final month of the quarter. The full details of the performance of our non-gold business and also a comprehensive look at the overall financial performance will be taken up by our CFO. Thank you. And now it is over to our CFO, Mrs. Bindu.
Thank you, sir. Good evening, ladies and gentlemen. Thank you for joining us today. With respect to gold loan demand, we continued our offerings of competitive interest rate, high ticket size gold loan customers. The impact of this new strategy is better growth, but decline on our spreads and margins. We foresee a steady to declining trend in our GNPA. Now coming to the operational overview, we are carrying surplus liquidity across all the businesses. Cash and cash equivalents on a consolidated basis was rupees 1,654 crore and undrawn bank line was rupees 3,202 crore. Our CP exposure is 8% of total borrowing in the standalone entity. Our ALM is well positioned across all buckets. Standalone borrowing cost has come down to 7.47% in comparison with 7.94% in Q2 FY22. Our consolidated AUM for Q3 was rupees 30,407 crore, up by 7% Q-on-Q and up by 10% YOY. The sequential growth in AUM was largely on account of gold loan growth, and our average LTV 65%, which is well below among the peer group. Consolidated profit after tax was rupees 261 crore, down by 29.4% Q-on-Q and down by 46% YOY. ROE on a consolidated basis was 13% and ROA was 3% for the quarter. About the gold loan business, which constitutes 67% of consolidated AUM, and the remaining 33% comprises of microfinance, vehicle finance, housing, and other loans. This quarter, we witnessed growth in gold loan in terms of amount and tonnage. The AUM increased by 8.8% Q-on-Q and up by 1.2% YOY. Our marketing campaign through print and electronic media and more number of employees for local marketing helped to achieve a better growth. Our gold holdings stood at 70 tons, up by 7.8% Q-on-Q and down by 2.6% YOY. During the quarter, we were able to add 3.81 lakh new customers. Gold loan average ticket size and average duration was rupees 53,397 and 111 days respectively. Advertisement cost during the quarter was rupees 51.4 crore, up by 126% Q-on-Q and up by nearly 300% YOY. Our standalone PAT was rupees 259 crore, down by 27% Q-on-Q and down by 44.3% YOY due to higher marketing spend and by lower yield. Interest receivable on gold loan was 3.6% on AUM and amounting to rupees 738 crore. The total number of gold loan customers stood at 25.09 lakh. The weighted average LTV stands at rupees 2,924 per gram or 65% of the gold price as on 31st December. Gold loan disbursements during the quarter at rupees 24,929 crore, and the online gold loan book accounts for 41% of the overall AUM. Coming to microfinance business, AUM stands at rupees 6,859 crore, down by 2.4% Q-on-Q and up by 28.8% YOY. And this business reported a profit of 60 lakh in Q3 FY22 compared to rupees 12 crore in Q2 FY22. Our collection efficiency from MFI business during the quarter stood at 96% and disbursements during the quarter was rupees 2,000 crore. The company has a capital adequacy of 19.7%. Coming to vehicle finance, the business reported an AUM of rupees 1,509 crore, which is up by 19.1% Q-on-Q and up by 52.8% YOY. Collection efficiency for the quarter was 103% compared to 102% in Q2 FY22. Vehicle finance NPA at 2.7% against 3.7% in Q2 on a comparable basis and 5.6% based on the revised RBI circular. The home loan business had a total loan book of rupees 816 crore, which is up by 11.5% Q-on-Q and up by 28.9% YOY. It now operates from 73 branches and reported a profit of rupees 1.8 crore. Collection efficiency for the quarter was 100% compared to 95% in Q2 FY22. NPA at 6.4% in Q3 versus 6.5% in Q2. As per the revised circular, NPA stands at 12.3%. Loan to NBFCs, the portfolio at rupees 56 crore and the small ticket MSME loans at rupees 714 crore. Provisions and write-offs for the standalone entity during the quarter stood at rupees 17 crore compared to rupees 10 crore in Q2 FY22, mainly due to the revised IRAC norms. RGNPAs at 1.36% at the quarter compared to 1.59 at the end of Q2 FY22. The board declared an interim dividend of 75 paise for this quarter. Our capital position is strong and the company is well capitalized with a capital adequacy ratio of 30.2%. Company's consolidated net worth stands at rupees 8,160 crore at the end of 31st December 2021 and the book value at rupees 96.4 paise. Thank you. Over to you all.
Should we open for Q&A, ma'am?
Sure.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Dhaval Gada from DSP Mutual Fund. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. So the first question is relating to the OPEX. So could you just break down the 217 crore, other operating expense excluding the employee cost into how much is advertisement and IT support and other OPEX? Some perspective, and also the same for last 3Q22. So 3Q21, sorry. So that will give us some perspective around what's the growth within the OPEX line.
Yeah, Dhaval, see, the majority of the expenses between the 2 quarters remain the same. If you see the increase between the quarters, this 40 crore, majority is coming from advertisement. some 10 crore impact from the depreciation element. That is more on account of 116 accounting. Other than that, we can say majority is coming from advertisement expenditure. IT support, be it IT support cost and or other operating overheads remains similar number.
Okay. So, and in absolute term, how much would be the ad expense now? Like in 3Q, how much did we spend on ad?
51 crore.
Okay. And this compares to about 40 odd crore that we had, 40-50 crore annual run rate that we had, in 21 and 20.
Right.
So broadly, what's the trajectory here for next year? I mean, how are you thinking about, will we continue in the similar trajectory, or any color if you could provide on this?
See, we had to go for a massive advertisement because we felt like there is a slump in the market, etc., because of the lockdown, prolonged lockdown, etc. So we thought, we should give a booster. So it was a booster dose to the market, which may not continue in the coming quarters. It will be moderated to a much lower level.
So, sir, should we expect it to go back to the FY20 kind of level, or like?
No, it will be something in between.
Okay.
Because we felt like our market presence should be made known. So we have capped at certain level, which is far higher than whatever we have spent, far less than whatever we have spent. It will be much more moderated.
Understood. The second question was relating to just the overall P&L construct. So once the expense sort of normalizes, the ad expense normalizes, and as the growth sort of sustains, just overall, how do you see the return profile starting to improve? I mean, we've seen the cost to income and overall profitability compress a lot in the last 3 quarters. Just directionally, FY23, what's your guidance on return rate? Thanks.
See, our yield was higher compared to the other player in the market. Our yield was higher. So, because of the particular situation, pandemic situation, very high level of liquidity, etc., so we had the challenge, and the NBFC customer, the other NBFCs, etc., were weaning away customers. So particularly higher ticket customers. So in order to bring them back, we have to put advertisement, we have to bring down our yield. Even now, the competition is there, but the market, what I read is, the NBFCs are targeting business, which is where the yield may slip to them to around 17% or so. This is what I read from the market. But we are maintaining our yield at around nearly 21%. And we are trying to maintain that. In this process, the growth may get moderated for some time, 1 or 2 quarters. And I feel like these players also, NBFC players also, may not be able to sustain business at that yield, and they will have to increase. So I feel like the rate war amongst the NBFCs is a temporary phenomenon, and I feel like in the coming quarters the situation will improve. And about the management of OPEX, Yes, particularly advertisement. I told it will get moderated. The other costs also, there is no reason why it should go up. So it may be maintained. The incentive structure also has been moderated. In these areas, we will be able to bring the cost down, and the business will have a reasonable growth.
Understood. Sir, just one final question on the OGL. If you see the degrowth in that portfolio, it's like about 30-odd%. And if you look at the number of OGL customer, that's also down like 34-odd%. So just, what's leading to, such a sharp drop, given that the OGL ticket is still, around 58,000, and before that was about 54,000. So some perspective on that portfolio. Why are we losing traction on that side of the business?
No, we are not losing traction. What happened is, we started giving the same rebate to other customers also. Earlier it was limited to the active OGL customers. Now, when that has been brought to the others also, there was a decline. So this number of 34% are the genuine customers who wanted to operate through OGL. So from here, it will bottom up.
Understood. Thank you and all the best, sir. I'll come back in the queue. Thank you.
Yeah.
Thank you. The next question is from the line of Piran Engineer from CLSA. Please go ahead.
Yeah. Hi, sir. Just had a couple of questions. Firstly, you mentioned that competition is doing, loans at 17%. Are you referring to banks or NBFCs? And I'm not quite understanding your reading. Did you say that our growth may slow down temporarily in the near term because of this competition, because we will maintain yields at 20%? So if you could just clarify what you're implying. See,
by competition, I have in mind about the NBFCs in the public market. NBFCs in the public market. So I am reading from the rates offered by them, which they have started recently. So it is because of my reading is it is because of the excessive liquidity in the market. So money is available. So at whatever rate they lend. So I don't think it is sustainable for an NBFC. So we have decided to keep the rates around 21%, which may lead to a slower growth. So what I used to say, we are targeting a growth of 10 to 15% per year. So the growth may be moderated to around 2 to 3%, 1.5 to 2% per month for the time being. Why? Because when they are offering at 17%, when we want to maintain around 20, 21%, in terms of the interest rate, we don't want to compete. That's the reason why, yes, the growth may get moderated to around 1.5 to 2% per month, but we want to retain this.
Okay, understood. Then we give these teaser loans at 7.5%, 8%. What percentage of our loan book would be at these teaser loans?
So the teaser loan is around, the lower rate is around, around 20%.
Okay, the share of AUM.
Yeah.
Got it. Sir, and also, why have we not seen any growth in Ashirvad? Because, in 2Q, we grew the book 15% in 2Q.
Yeah.
3Q, we've not grown the book. While our peers, all other MFIs have seen good growth. So it's like, it seems to be a bit of flip-flop in strategy here and there. So could you just clarify exactly what we are planning to do?
See, we have seen uncertain times, particularly with the onset of this Omicron variant. We have seen some sort of uncertainty. Then we thought of emphasizing on collection and remaining very prudent in the lending. So our underwriting have been made tighter, and our preference was existing good customers. So when the things improve, situation improves, we'll increase the speed of dispersal. So here I want to add one more sentence. Our collections, inclusive of the restructured portfolio and other loans, emergency loans given, all put together, all inclusive, the collections have come to a level of 97-98%. Hopefully, this month it may improve to 99. Next month it will cross 100%. Of the billing. So the collection 100% is including arrears. But in our accounting of these EMIs, whatever comes first, if at all any arrears is there, it goes to the arrears first. Only if it clears if the customer clears full arrears, it is coming to the current billing. What I understand is many of the MFIs, the practice is whatever comes, whatever money comes, it goes to the current EMI. Only if it is any excess, it is going to the arrears. Our treatment in the MIS is yes. Whatever is coming, it goes to the arrears first. That is how we report our billing collection.
Understood. Sir, just one last data point. What percentage of our loan book is at a 3-month tenure? Last quarter it was 53%.
Yeah, that's it.
It's more or less same only, 50-50 kind of thing, 50 3-month and balance in longer tenure.
Okay. Thank you so much.
Thank you. The next question is from the line of Abhijit Tibrewal from Motilal Oswal. Please go ahead.
Yes, sir. Thank you for taking my question. So, I mean, we said that going forward, the operating expenses would moderate, and we would expect that advertising and promotion expenses to come down. And the same, I mean, that maybe we also added that maybe because the competition is offering gold loans at 17%, we want to maintain our current yields of 20-21%. So we'll probably see moderate loan growth over the next few months. But sir, would it be fair to say that large part of the growth that we saw during Q2 and Q3 was driven by, I mean, this higher OPEX that you had, be in terms of advertising, promotions, or incentive structure for the employees? And now that we are kind of moderating that, we are also seeing moderation in loan growth.
See, it is more on account of offering a lower rate to high-ticket customers. So that is the reason why our yield has been is come down. So, a 9 months performance, because of that, if you take from the data available in the market, in 9 months collateral growth, we have grown by 6.28%. Whereas the other player, other gold loan company in the market, their collateral growth was 4.09%. And our AUM growth, volume growth, stood at 6.37%, whereas they stood at 4.41%. So the yield on the portfolio has remained somewhere nearly around 20.5% for both the companies. So now, at the rate what they started offering from the recent past, it appears to me their yield may translate into an average yield of 17% if they maintain the same interest rate for a longer time. It appears to be.
Right, sir. And sir, to that extent, I mean, you said that, I mean, October, November months were really good. We saw the same kind of momentum that you saw in Q2, and then in December, we saw that the momentum dipped because of concerns around Omicron. So, sir, I understand times are really different, the third wave and the first wave. But, I mean, if that were to be true, I mean, would you have seen better momentum in the months of, let's say, end January and early February, when concerns around Omicron receded? And just like in Q2 of FY21, when everyone did record levels of disbursements, are you seeing momentum really pick up in gold loans, or would you say that the demand in gold loans continue to remain tepid?
So in January also, we are not seeing much increase in the momentum. To that extent, February also we couldn't see that. But now, I hope the things will get better. Why? Because the schools started opening, the other educational institutions, etc. So I hope all these will create some momentum.
Thank you. The next question is from the line of Ashwani Agarwala from JM Financial. Please go ahead.
Hi, sir. Sir, just want to know the reason that why would a borrower come to Manappuram Finance to take a loan rather than going at another NBFC or a bank who is lending at a cheaper rate?
See, one, for the borrowers also, there will be some connect with some NBFCs, regular connect with some NBFCs. That sort of affinity is there. And see, for those customers pledging for a very short duration, even though the rate of interest may differ by 2-3%, that may not be a big issue. And many of our customers are short-term borrowers. So, for a long-term borrower, yes, okay. So that's why if the competition offers at 17% and we offer at 21%, we expect a growth of 1.5 to 2% per month only.
Okay.
So, but generally what we feel is going below is 21%. Like what I see in the market from the NBFC players will not be prudent enough.
So just wanted to know whether timing is of essence, that in how much time do you disburse the loan and what's the time taken by the competition and the banks and the other NBFC which is giving loans at 17%?
We disperse within 15 minutes. We disperse within 15 minutes. If he is totally a new customer, it may take another 5 minutes more, 20 minutes. That is the case with many of the NBFCs. Banks, they may take 1 hour, 2 hours, etc. Because their procedures are more. They are available only for a lesser number of days in a week. And their timing also mostly between 10 to 2 or 10 to 3 only. Whereas we are available from 8:30 to 5:30 every day, including Saturday. These are the advantages. And we have a strong client base that is maintained. That is why, somebody offers, yes, at 17%, there may not be an erosion of the small ticket customers. Large ticket customers there may be. That's why I am expecting a growth of 1.5 to 2% per month. That is my expectation.
Okay. And sir, because since our turnaround time is much shorter, is there any chance of any high slippage or slippage in asset quality? Or we may be not be able to check the quality of the material properly?
So we have not faced that problem in the past. Throughout our life as a gold loan NBFC, we are able to do that. This is nothing new.
Sir, last question from my side. We have seen our advertising expense going substantially. So what is the additional loan book which we have garnered, or the additional profitability on advertising which we have made?
See, during the second quarter, during the first quarter, you'll see our portfolio down to 16,000 crore plus. Now we are nearly 20,500 crores. So this is from 16 crores to 20,000 crores plus. So a growth of around 23%. So this is the result of that activity, because we have seen the demand getting a slump. People, so just to energize the market, we have to do a few things. One, an advertisement campaign. Second thing, our employees were not ready to go out on the fear of this COVID. A higher incentive motivated them. These are only because of that, and these will get moderated in the coming quarters.
Okay, sir. Thanks a lot.
Thank you. The next question is from the line of Sanket Chheda from DNK Securities. Please go ahead.
Yeah, hi sir. So my question was, if we compare the interest income YOY, that is the last year's Q3 and this year's Q3. Last year's Q3 also our interest rates or the yield was about 26%. So from there we have taken about 20% cut into the yields. But at the same time, our loan book, gold loan book is up by 10% from last time. So the net impact on the income should have been closer to 10%, but the gap still remains at 20%. It's like we are reporting 21% yield, but the impact is similar to what it could have been if the yields had fallen down to 19% or so. So why is that gap? That's one. And second, that if we have taken such a sharp cut into the yields and have reported this 8% growth, and last quarter also we had reported 13-14% growth. Why suddenly we are now losing confidence on the growth front going ahead? If we were to maintain yields now at a level at which we are currently after taking such a high fall.
So we are losing customers at a yield of around 25%. That's the reason why we thought of bringing it down to around 20%. So the results are seen, no, but as I mentioned, we have seen a decline to around 16,000 from 19,000 in the Q1. Then we have come to 20,500. So now then why now we want to moderate? Because we feel like going below this 20-21% will not be for a gold loan NPA. If other players are doing that, let them do. And we believe that it is not our cup of tea. We can maintain a growth of 1 or 2% monthly. So even in this range, maintaining a higher yield than them. And that is our strategy. The other data you have asked, CFO will share.
Yeah, so if we compare last December, we were at almost 20,000 crore gold loan portfolio, and we have seen decline in Q4 and Q1. So our portfolio from 20,000 crore has come down to 16,000 crore. Then from there we saw if we see the average, the main decline in yield happened during this quarter only. The Q2 we have seen a 1% decline in yield because this low yield product to high ticket customers effectively we started in Q2. So the impact was lesser in Q2 and maximum impact happened during this quarter. So the calculation is maybe because of the year-end numbers are not the average numbers because we have seen 2 quarters decline in the portfolio. Then from there only we were able to build this to 20,000 crore level.
Thank you. The next question is from the line of Manan Tijoriwala from ICICI Prudential AMC. Please go ahead.
Hi sir, what is the proportion of disbursements above 3 lakh ticket size that you would have done in Q3 and what is the proportion in the AUM as on date?
We used to track above 1 lakh ticket size. We have seen a 3-4% increase during the quarter.
Okay. And so we see that the customer base has remained flattish quarter on quarter and the AUM is increased. So it seems we are acquiring higher tickets. So are we seeing that there is less demand in the lower ticket size customers?
Yeah. See, this COVID has impacted the bottom of the pyramid highest. So the demand has come down from their end, and the agriculture sector. So the activities have come down, and it was less. And other construction activities, particularly private construction, everything as the rural economy has come down. And this has pulled down the demand for lower tickets.
Okay. And so how rate sensitive are customers in the larger versus smaller ticket sizes? And are we expecting yields to remain at 20%, or can we go back to the 25% number at some point?
So, see, all depends upon the market conditions, the RBI's policy, the government's policy, etc., the market liquidity. All these are the factors governing the rate of interest.
Okay, so going back to the 25.6% yield is not completely ruled out, right? Or are we going to now look at 20% yields going forward?
I'm not able to rule out that. I'm not able to rule
out. And how far out would that be possible? Or how soon will that be possible?
Yeah, I'm not able to assess that in the present situation. One thing what I want to highlight. See, we always maintain asset quality high. Our NPA, stage 3 asset percentage is 0.9% only. Less than 1%.
Right. Fair enough, sir. That's all from my side. Thank you.
Thank you. The next question is from the line of Nihar Shah from Newmark Capital. Please go ahead.
Hi, sir. Just a couple of questions from my side. You mentioned about the cost normalizing going ahead, some of the investments that you've made. If you had to think about it from a cost to income or a cost to AUM perspective, what do you think is the steady state levels that you would like to operate at going ahead?
So, the cost to income ratio. So the cost will definitely come down because the income goes up. The cost in HR need not grow so much, so it will remain more or less at this level. With the other costs like advertisement, etc., yes, which I feel is only temporary. All these will get moderated. High incentive to employees, etc. All these will get moderated. So the cost to income ratio, yes, it will come down. Cost will definitely come down.
And if you had to just while you give us some qualitative understanding of what the competitors are doing, if I had to understand who are these competitors, is it some of the online gold loan players who come in, the VC funded guys? Is it some of the newer NBFCs who entered and been aggressively growing in this segment? One of the more established players, banks, where is exactly the competition coming from, or are there multiple sources of competitive pressure?
Mainly from the conventional NBFCs, not the new generation digital players. Banks, yes, they offer competition. But I feel like it is temporary. I have seen this situation of competition from banks several times in the past. In bad times, when the avenues for other lending comes down, banks used to be active gold loan. But when the opportunity comes for the other, their focus gets shifted to larger tickets, loans like 10 crore, 20 crore, or 100 crores, 200 crores, like that. This I have seen several times in the past. You can also look at the last 10 years. Yes, at times, yes, all the banks, including largest of the private banks, were aggressive. Then slowed down. yes, during this time, yes, they have become active now. Also, to some extent, they are active, but I don't think yes, they will turn out to be a perpetual competitor.
Fair enough. That's all from my side. Thank you.
Thank you. The next question is from the line of Dhaval Gada from DSP. Please go ahead.
Sir, just a couple of follow-ups. First is on growth for next year. Do you still see the visibility of achieving 15 to 20% kind of AUM growth?
Yeah, that I foresee that opportunity. Yes.
Understood. And the second part was on the credit cost. So overall, we've seen now for almost 8 odd quarters in the MFI business, the elevated level of credit cost. What is your, expectation from that business in terms of, profitability normalization and overall credit cost moderation? Any thoughts around that?
Yeah. See, for the next 2-3 quarters, I expect some impact. After that, it will go to pre-COVID level, provided there is no more variance of this COVID entering and lockdown, etc., etc. I don't foresee that also, because the world has learned how to live with this COVID. So I foresee the situation will come back to pre-COVID level towards the fourth quarter of next year. Means that 99% collection, etc., etc. Now also we are getting. I hope this month we may touch 99 or even 100%. This is including arrears. This collection is all inclusive. Means emergency working capital loans or all restructured loans have come out of that, including everything. Yeah, nothing is parked under these as far as collection is concerned.
Understood. So basically, you're saying that the sort of normal 2% kind of pre-COVID credit cost run rate that we used to have, so that we should see from fourth quarter of next year.
Yeah, that level. Yes, but see, the new dispersal, the collection efficiency is around 99+%. So the problem is in the pre-COVID portfolio.
Understood. And sir, just one last point on the OPEX, sort of clarification part. So, overall, if you see the trajectory for a fairly long period pre-COVID, we used to be in that 300 to 350, 360 crore kind of band, and that sort of continued till fourth quarter of 21, and thereafter we started seeing this delta because of incentivization to employees, higher advertisement expenses, and depreciation changes, etc. Just directionally, given that the growth is likely to sort of be moderate in the next few quarters, how do you see the absolute level of OPEX sort of stabilize? If you could give some perspective around, it was about 522, 523 crore. Will it be in that same level in absolute terms or come down? Some color there would be useful to just get full clarity. Thanks.
We have reasons to do that. The first quarter, there was a decline of gold loan portfolio from 19,000 portfolio to 16,000 portfolio. So we have seen that the employees are not going to the field. They are not working in the field. We are on the fear of this contracting this COVID, etc., etc. So that's the reason why just to energize them to re-engineer the entire thing. We have spent this sort of massive, because we have entered into a massive advertisement and also incentivization. This will not be continued. We have reduced that once the market is okay. We are slowly reducing that. So it will definitely get moderated going forward. So the growth, we don't need to add more people because the branches remain, the number of branches remain the same. We have built a capacity where the business could be even doubled without increasing the headcount, etc., etc. So all these are the pointers towards lowering the OPEX to AUM going forward.
Understood, sir. Okay, thanks.
Thank you. Take the next question from the line of Manju Oberoi from Yes Securities. Please go ahead.
Yeah, hi sir. This is Rajiv Mehta here from Yes Securities. Sir, a few questions on gold loan book. So this 1 lakh ticket size and more book is, you said that the proportion of the book has gone up by 3-4% in the past quarters. But what will be the overall proportion now? More than 1 lakh ticket size in the AUM?
54%. 54.
Okay, so 54% of the AUM will have a ticket size of more than 1 lakh.
Yes.
Okay. And can we assume that most of it will be a teaser loans? So you said 20% teaser loans will be here, right? Within this 54%.
Yeah. It will be. Yes. So let's see. Usually, our 1 lakh plus and lower than 1 lakh used to be in the same proportion, 50-50.
Yeah.
So on the one side, the demand has come down. Small tickets below 1 lakh, the demand has come down. Whereas, for growth, we need to more rely on this higher ticket size customers. That's the reason. And I think, even when we increase the number of customers, going forward, we will be able to increase the small ticket size borrowers also when the demand in the rural economy picks up.
Okay. And can I get the metro non-metro split of the gold loan AUM book?
So you have the data?
Yes.
Yeah. So metro used to be?
Metro is around 22%.
Metro 22%.
Urban around 28%.
Yes.
And semi-urban 32%, and the balance is in rural category. These are internal category. Metro means Bangalore, Chennai, Delhi, Mumbai.
Okay, yeah, thank you. And just last thing on this interest rate schemes which we were running and which we changed the interest rate stance and we went for high value segment. We also lowered our interest rates starting from 6-7 odd% for higher value loans. Any changes, any reversals in the recent months? Have we kind of raised the lowest interest rate now? Or are we now, making it applicable to a higher value loan segment as compared to, say, just about 1 lakh before? Any tweakings that we have done recently to protect, our yields or margins on an incremental basis, say in December or January?
Yeah. So we have made some tweaking in some categories, like less than 50,000, between 50,000 and 1 lakh, 1 to 2 lakhs, etc., just to ensure the yield going up to around 21% in the next 1 or 2 quarters. So this we have done. That's why the growth projection and expecting around 1.5 to 2% per month only. Yes. As long as the competition is, as I read from the market, that they are dispersing, where their yield may go down by around 2-3%. This is what I believe.
Okay, sir. Thank you so much for the call.
Thank you. Ladies and gentlemen, due to time constraint, we take that as the last question. I now hand the conference over to the management for their closing comments. Over to you.
So, thank you for the questions. Any details required, we are available. Because of the constraints in time, we are not able to share the detailed data. We are available, and any questions, anytime, you are welcome. Thank you.
Thank you.
Thank you. Ladies and gentlemen, on behalf of Monarch Network Capital, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.